Let's talk Dell, because it's an important day for the company. It's having an analyst meeting. It begins a half hour from now. And, of course, the long-awaited spin of its ownership of VMware is occurring November 21st. If you're a shareholder, by the way, VMware, you're going to get 0.44 shares of VMware for each Dell share, or I should say for Dell. And the value of that VMware distribution is equal to about $50 per share of Dell. If you're a Dell Technologies holder, no change to the number of basic Dell shares outstanding. They are going to get another $9.3 billion. That's a special dividend being paid by VMware to Dell. But the key thing a lot of investors here have been waiting is, what are the projections going to be? What's the capital return going to look like in terms of Dell, which is a company that is going to produce a lot of cash flow? And they seem to like what they're getting this morning, although you can see the stock is not doing much. A share repurchase will be put in place effective after the spin of VMware. $5 billion will be the size of that. That was a bit more than people had anticipated. They also are committing to returning between 40 and 60% of adjusted free cash flow starting in fiscal 2023. That is a bit better than a number of analysts, I think, who'd been following the company expected. Remember, there's always this undercurrent, Jim, of Michael Dell, and people remember the past that, is he really looking out for me? Is he really trying to do a creeping LBO of the company? Is he just going to amass a lot of cash and use that eventually to take it private again? This seems to go against that, given the capital returns they're talking about. With a dividend, by the way, now that could equate to as much as a 2% yield. And then overall 3 to 4% revenue top-line growth and 6% plus non-GAAP EPS growth seen. So that's what we're hearing on Dell. You can see those stock not doing much.
Okay, let's talk about whether he's out for himself or not. A little more than a year ago, when the stock was in the 60s, he wanted to come on Mad Money. Why? Because he said, you should buy my stock. It's really cheap, even ex-VMware.
Yep.
Now, if he's really out for himself, why is he telling everyone to go buy my stock?
I'm not saying he is. I'm not saying that is the case. I'm saying that's been the perception.
Right, but I am saying that
Right. By the way, what they're announcing this morning would also seem to indicate that it is not about some sort of creeping LBO.
I'm glad you said that.
They aren't going to go about doing some large acquisition or amassing enormous cash position, given they're going to be returning, let's call it 50% of free cash flow to shareholders.
It's funny. I say it naively. Mad Money's not about friends about money. I've gotten to know Michael Dell over the years, and I find myself saying to people, do you know how much money he gives to hospitals, children's hospitals?
He's very charitable. He's also one of the wealthiest. He's one of the wealthiest men on the planet.
And we don't talk. No, but we don't talk enough about CEOs who do a great deal of good things.
He does a lot of good things.
And when I had him on, I wanted him to talk about it, and he said, "Listen, I don't do that."
He owns more than 50% of Dell, by the way, economics.
But I'm just saying that it's okay periodically.
And he has that huge investment arm.
Adam too.
Yeah.
He has. Remember, he brought in the former CEO of.
Well, he brought in Greg Lemkow over there.
But I don't know. I mean, I've been trying at my advanced stage where I can now get the Thermoderma to try to periodically mention that some of these CEOs are doing great things, and they're not doing it to be mentioned, but that we should mention.
All right, that's good. Look at what Musk has done for St. Jude just this past couple of weeks.
And that's fantastic.
Speaking of CEOs that you have on. CRM raising their revenue guide for the year, giving us some initial revenue guidance for fiscal 23. 26.3 to 26.4 billion for the year, Jim.
Yeah, it's a little bit better. Now, there are going to be some people who say, oh, please. This is the analyst meeting that always comes with Dreamforce, and I thought that what was great was that we were worried about 2023 guidance. Now, here's the star of the show, David, and I know that you're focused on something else, so I don't mind just...
No.
All right, here's the star of the show, Carl.
Make it quick.
It's 20% gross margins. Gross margins are going up, and that's why people are excited. Because of the gross margins going up. This was the same meeting, by the way, where, if you want to look back perspective, that he said, I'm not going to buy Twitter. Well, this time, the gross margins going from 18.5% to 20% is a very big deal, David.
Shepard Smith here. Thanks for watching CNBC on YouTube.